Perfect. Hi, everyone, and welcome back to the Structured Products Insights. Today, I have a very, very special guest, Matt, CEO of Halo Investing. Hi, Matt.
Good morning, or good afternoon, I should say. My morning here, but I really appreciate you having me on today, and yeah, looking forward to digging in.
Great. Look, Matt. I have a personal, personal touch to the Halo, right? Because I saw it from the beginning when Jason and Bijou were building it from scratch, and for me it was amazing, like all the history behind Halo and to the size that it's Halo it's now. So maybe Matt, you can tell everyone what Halo is and and why do you call
Sure.
it a Halo?
Yeah, for sure. Yeah, we'll start there and dig in. But just a little bit of the history. Let's start at the end, right? We are a wealth technology. We provide a platform for creating access for advisors to structured notes and other protective investment products. So when we say protective investments, that means structured notes as well as insurance, annuities, buffered ETFs, and SMAs or portfolios thereof. And so it's really meant to be end to end as an infrastructure, right? So connecting that issuing bank in the case of structured notes to the end advisor. So, allowing them to do product discovery, product selection, execution, and management. And so you mentioned our two co-founders, Bijou and Jason, and yes, they formed the firm about 10 years ago. So we're coming up on our 10th birthday here. Strong focus on democratizing access. If you think about the two of them, Bijou, tech entrepreneur, understood the power of technology for scale. Jason was a private banker, used structured notes deeply in his practice, but saw inefficiencies around just the manufacturing, distribution, utilization. And so they came together to form Halo. And you asked about the name. So the idea is to truly create a halo around that portfolio. So protect that portfolio from volatility, from downside market pressure, but to create that protection around the portfolio itself. And so that's really our start. Again, our job is to make sure that you use that technology to make it easier for the issuer to gain access to the consumer of the product, which is the end investor. Expand the investors that can use the product itself, and then again, just drive efficiency through that technology.
So I think that's quite interesting, and we will go more into Halo and these products, right? But how it is to go from founder-led company like with Bijou and Jason and you, right? Because you came from Morningstar, you have a lot of experience on advisor platforms, and now managing by yourself versus the founders, the guys who created the company and the technology.
In all the respect for the entrepreneur, right? They saw a concept, saw an idea, built a great technology, and so super appreciative of the opportunity here. And so as we've moved from that founder led to now myself in that CEO seat, the core focus is on driving growth and adoption for advisors in mass. And so you mentioned some of that experience, Morningstar and other firms in those roles really focused on using technology to deliver managed solutions. And so whether they're some of the early model solutions, mutual fund, ETF, other solutions, early robo advice. So how can you make recommendations, guidance, and even advice in the case of portfolios? And so really focused on connectivity into that world, that environment that the advisor works in. How do you meet them where they work? I've had a lot of experience. If you talk to me often, you'll hear integration come out of my mouth all the time. And that has two key elements. My experience has helped us focus on integration into the portfolio itself, its role, what's the role of that protective investment solution, that structured note, what's its purpose, but also then integration into systems and workflows, right? If it's not as seamless as possible, it gets very difficult from a product adoption and advisor utilization. And so, really tried to drive us into that stage of growth, create process, infrastructure, mature the organization, really surrounding myself with a team that has deep experience in working with advisors and the technologies that they use in order to deliver those products in a great scalable way.
Now, it's also very interesting, right? Because as you said, right, you just didn't focus on structured notes, right? You now have the structured notes, you have some market link CDs, you have the buffered ETFs, the annuities, right? they are all structured right in a way that they give some type of protection, right? Hard protection or soft protection. How easy and how important it was to try to put all these different wrappers into one platform.
I think it's very important because based on the nuance of that client need, right, there's obviously been a massive secular trend around increased personalization. And so personalization comes into play in terms of the portfolio itself, the way it looks in the asset classes, but it needs to be personalized at the product level as well. And so while we're focused on protective investment solutions, we recognize there's different ways to do that. Insurance obviously is the most permanent form of protection you can have, but annuities themselves offer a different dynamic. And if you kind of you think about it from a liquidity and security perspective, each of those products has a usage, prospective usage in the portfolio. And so, making sure the advisor understands the value of protection, right? So I mentioned personalization, but investors as well, though, they want defined outcomes. We've had this shift in dynamic, both younger investors and the volume of investors nearing and entering retirement, where they are willing to give up some of the upside to maintain that level of protection and definition of the outcome. Surety, right, of that outcome is important. And so, again, I think having a platform that gives the advisor access to those institutional caliber solutions, but in a way that is as easy as possible from a utilization of technology, I think is critical. And so the toolkit, right, notion of protection and how important it is, and then give them, again, multiple tools to implement portfolio strategies across that product set is hugely important to us.
So, and I think that actually match a bit with when me, Jason, Bijou discussed about this 10 years ago. The conversation was always about ultimately the goal is to get a farmer or someone in the retail in cleaning their garden or the garage be able to go to their app, just buy a note or provide protection or manage their FX or commodities risk. But we're still far from that, right? This product is still not on the hand of the investors, right? It's still locked into the advisors.
Yeah.
What are the key aspects that we kind of need to break that down to go to the next level?
Yeah, I touched on it earlier, but let's definitely dig in there. I do think it's critically important. There's a few key elements that are critical. So, education is obviously absolutely imperative, and so these are complex products by FINRA's definition and by just generally, right? Just in terms of their underpinnings, but creating a world in which there is a quality level of quality education is key. And so we spent a ton of time on thought leadership. We have the Halo Journal, which anyone can go to and learn about structured notes, how they work, how they can be included in portfolios. So that is key. And so it starts with the advisor, and then markets normally mature, right? Starting with the advisor, their connectivity into that investor is key in terms of passing on that education. The other piece, though, and I mentioned that portfolio integration, I think is absolutely critical. So if we kind of look through time, adoption of new investment products, investment strategies, or even asset classes, I kind of go back to the early days of my career where there was discussion in the U.S. market around inclusion of international equities and emerging markets and portfolios, and should you have them or not. And once we were able to show that client an asset allocation that had those asset classes and the impact they had on risk and return, they became ubiquitous in portfolios. And so we've seen that trend play out in terms of use of ETFs. As they were included in model portfolios, their adoption just skyrocketed. In terms of alternative investments in general, if we can integrate them into the model, right, that blueprint that the advisor has, then we can drive that dynamic utilization, of the product and really get it to the point where, again, it becomes ubiquitous in portfolios, and then that does create the access at that end retail investor level. I don't foresee us getting to that direct to consumer anytime soon. I think we need to do the things we need to do, engaging with that advisor, and you're making sure that they're armed with the tools they need to bring their investors along. But I do see the ability for the U.S. market to really grow dynamically. 5x in the market adoption, I think, is absolutely achievable, right? If we provide those tools, again, integration into the portfolio, but then just make it really easy to buy and manage in terms of their wealth technology platform, their custodian, all other aspects of that ecosystem in which that advisor works.
I mean, technology, I mean, I completely agree with you, right? I mean, both of us spend a lot of time on that. And the other thing is of course, is education, right? You mentioned education, you mentioned the journal, but you know, we've been. I mean, even yesterday, someone was telling, yeah, the education we did was when you, Tiago, went on the, through multiple cities doing advisor training, right? I mean, I'm not scalable. Like that is not scalable. How do you make education scalable to get to all the advisors across the US?
Yeah. So, it is embedded in the platform, right? So you can come onto the platform and digest content from the journal as well as our platform on structured notes 101 through to product. It's all embedded in the technology, which is key. Now, I will say as well, though, we're still, like, I would describe our current state as technology enabled distribution. And so we do still have, I'm pointing out to the group here, right? We number of individuals that go out and teach the advisor how to use that technology, right? Teach them about the product, teach them how to use that. Now, there's also on-demand content, webinar, seminar that really does, still gives that human touch. But we also, again, within the platform itself, you can take courses, understand your proficiency through tests and things of that nature to really make sure the concepts are landing, and then just making sure that when it is needed, there is a person at that other end that can still step in and help guide you the rest of the way. And so it's a balance, right, in terms of a heavy focus on embedding that content into the platform, but then also again supplementing it with field engagement out there to make sure the advisors really getting what they need in terms of understanding and therefore then adoption.
So we're talking about those two pillars, right? Technology and education. But the third one you mentioned, I completely agree, right? And there is not much is how these products fit in a portfolio, right? And before we start this podcast, we were talking about it, right? You guys are trying to innovate without telling us your secrets. What are the things that is important for you when it comes to how these products fit in a portfolio and what advisors should look at?
Yeah, absolutely. And so, yeah, we're very excited here. Just a couple weeks back, we launched what we're calling Aura. So, again, another play on the Halo name. And so, Aura is a tool that's embedded inside our platform. And what it allows the advisor to do is demonstrate the impact of adding a structured note into their asset allocation strategy. So we have asset allocation portfolios that you can visualize within the platform, and then you can select specific structured notes, right, to add into that portfolio, and then we'll share with them empirically, right, through quantitative, analysis and data. Here's the impact on return. Here's the impact on downside risk. Here's the drawdown frequency, focusing on protection-oriented statistics, but literally showing here's the math that says you should integrate this product into the portfolio, or quite frankly, from an objective perspective, here's a product that might not be specifically meeting your needs. And so we've launched that product into market. We think it'll have a great impact, again, just from a advisor's ability to convey those concepts to their clients right out of the gate. Future plans, and I won't share too much of our secret sauce, but we are focused on integration into the unified managed account, right? The UMA, getting that product in a place where it can actually be bought and managed easily. And then, of course, it wouldn't be a podcast without talking about AI. We're doing some pretty interesting things in the background right now, just around how you can move from a situation where it's very structured inputs and outputs to analyzing in mass the universe of products available and coming back with some really specific guidance or recommendations around product fit. We're really excited about that. Stay tuned back half of this year for more on that. But Aura itself, we think, is a huge leap forward, just in that you can show your asset allocation, show the note you're intending to purchase, show the actual impact, and say it is doing its job, right? Here's its role, and it's doing that job.
Also one topic which I really want to speak with you, right? Because you were one of the first doing these, which is the SMAs. I mean, I've heard about SMAs back in Hong Kong in 2015, probably like that. So it's been there for 10 years. But I mean, in the US, it's been picking up with you, with some of your competitors, creating those and growing. Can you explain? All right. Can you explain
Yeah.
what is SMA and what's the value for you, right? Well, why do people are using SMA?
Yeah, absolutely. So yeah, the SMA, that separately managed account, just to give the baseline for the listener out there. So this is a professionally managed portfolio of structured notes. And so like other investment strategies, it has an objective in terms of growth or income or a combination thereof, focused on downside risk mitigation, focused on appreciation. And so like other investment strategies, but these are specific to structured notes. And why do I think that's important? And so, we talked about education and onboarding and bringing new participants into the market, right? Advisors that may not have used these strategies. And so, what we found is that a lot of conversations would get to the point where they said, okay, I now get it. I understand it. I love what the product does. And then there's two main objections. I don't know that I feel quite qualified to build that portfolio, or quite frankly, I just don't have the time or energy to manage ongoing, right? Because these need to be managed on an ongoing basis. There's a
And
life
it,
cycle to
and
them.
it's not easy.
And
Yeah. Especially with coupons, income notes, right?
you got it. Yeah. And so the idea is these are note experts, right? So the professional money managers that we've partnered with provide access to a portfolio of notes. They manage the purchase of those notes, the ongoing life cycle. And so it really gives the advisor and their client the experience of having a high quality structured note allocation within their portfolio, but it alleviates some of that investment and operational burden on the advisor. And we think, just like Aura, that tool, access to professional management is really a gateway to more usage. And so we do think at some point you may have advisors that mature and say, okay, I love the strategy. I now know enough. I'll begin to manage either around them with my own allocations, or I may decide I'm now good enough to manage them on our own. Either way, we love the idea that again, that SMA is going to bring more entrants, more access in a professionally managed way that should give a quality experience, right? What we don't want is more advisors using the product and finding themselves, where their client doesn't have the best experience. This definitely reduces that risk of bad experience. So
I think it's quite important, right? And quite interesting, right? Because you have the SMAs which simplify the product or give exposure to structured products without not needing to understand so much, or give some of the day-to-day management to someone else. But of course, the big advantage, and I mean, I've been in this industry for 20 years, only on structured products, which is maybe sad, or depending, in how
it's
you
great.
see it. But I mean, I think one of the reasons why I fell in love with this product is like the customization, right? The way how you can build a unique product to a client, the specific, with the potential, with a specific term, specific exposure, the different payoff profile, right? So, and we can see, right? It's customization seems to be where we all want to go, but we're not there yet, are
Absolutely.
we, Matt?
Yeah, no, that's a great point. And first of all, I think it's great. You're a pioneer here, right? 20 years, you'll get us to where we want to go, right? You mentioned personalization, customization. And I loved, when I joined Halo, I was beginning to, deeply explore what was going on. I'm like, wow, from a personalization perspective, what's more personal than having your own QSIP? You get your own QSIP. Right? And so it is critical, though, jokes aside, right? So when we think about defined outcome, right, the ability to really hone in on the specific outcome that investor is looking for, right? So upside participation with downside risk mitigation, dialing in those levers, translating that underlier, stock, index, whatever it might be, into a sustainable stream of income, right? The ability to tailor the solution is so important because it just matches up with what the investors continue to ask for. Personalized experience, manage my risk, drive my growth, help me achieve my goals. And so you experience this, right? Back in the old days, having to call up each of the issuers and get the various quotes, try to mass them. And by the time you get the last one, the first one was out of date. And so just the ability to provide that access to multiple issuers that have great capabilities in different corners of the market as well. So helping the advisor find which issuers are best suited for which product types, making sure that we gain access to multiple issuers so you get best execution, best pricing, best terms.
Yeah.
That, the technology supporting that, I think, again, is just another aspect of critical functionality to drive this product adoption into a core of the portfolio. Someday, I do strongly believe advisors don't ask, okay, am I going to invest in mutual funds or ETFs this month or this quarter? They're there. The types of products they use over time change based on risk tolerance, market dynamics, right? Their view on the market, and we see structured notes the same way. Given the customization, the usage evolves on a month over month, quarter over quarter, based on both the needs of that investor, that advisor's outlook or view on the market. You marry those two things together with access to 20 some odd issuers in the US to provide custom solutions. It's just a great dynamic, I think, for that investor to ultimately get the outcome they're needing there.
Let's talk about RAIs, right? Because you're talking about, the things of the advisors, advantages, how they can use it. I think it's important, right? Because RIA business has been growing. Halo especially has been growing. The adoptance of structured notes on the RIA space. So Matt, even though we don't work together, I know. So tell me why it's important. Well, in this particular case, structured notes, right,
Yeah.
and buffered ETFs to the RIA market and to those advisors.
Yes, and so that market, as you mentioned, growing dynamically. I think it's an interesting conundrum, right? I think you've seen your market, from a market performance perspective, assets have grown, therefore revenues and profits have grown. Organic growth, right? So an individual advisor being able to differentiate themselves and bring new clients in has become, though, massively competitive. And so when you think about the power of protective investments, structured notes, and those other products, it is a way using the technology platform and infrastructure to make it accessible. If you're a firm trying to recruit new advisors in, it definitely differentiates, right, in terms of a product that had I'll say mostly institutional. A lot of those advisors, the breakaway phenomenon, they've used those products, are used to an experience, and when they move into this RA world, they need access to that technology infrastructure they're used to. And so it's a way for to attract advisors. It's a way for the advisor to attract and retain clients. And so it's a differentiated product. Although it has a rich history, it's still new to many advisors. And so it aligns again with those secular trends around personalization, defined outcome, risk management. It is, I'll say, alternative-ish, and we can talk about that more if we want, but it is unique. It's not traditional. It helps deliver that defined outcome, achieve the new client acquisition. But as importantly, though, because it's protected in nature, when you think about assets and asset growth, it definitely keeps those investors on track. And so it reduces, quite frankly, the frictions in the relationship, because you define an outcome, you use these products to deliver that outcome. I'll say that, obviously you're subject to, obviously market performance, but I think it reduces, quite frankly, some of the frictions that can happen around client expectation versus advisor portfolio delivery. And so I think if you can shrink that, it just enhances, right, that relationship with the advisor. It helps them grow as an independent. That's having to utilize multiple technologies, right? There's not as much of that ready-made infrastructure. We want to step in and make sure we provide it to that independent advisor in a way that puts them right on par, right, with the most advanced institutional caliber investments that are out there in the market.
And I think so. I do want to continue this conversation, right? Because in my view, an advisor nowadays with technology like equities, mutual funds, ETFs, right? The old standard, right? You can go to your mobile and just trade and buy, and the value of advisors starts to shrink, right? That's how I see it. While with structured notes, because of the complexity, because of the bespoke customization, that's where it brings value to more the advisors, right? Especially for the experts, the independent ones, right? Because they don't care, they really want you to succeed, because that's the way they justify themselves, right? Is
Yeah.
that the same view you have, or am I completely wrong?
No, not completely wrong at all. I would say that I'm a huge believer in the power of advice and the role that advisor plays. And I think you've touched on a couple key elements, right? that advisor's job to make sure that those products that might be a little out of reach to the retail investor, so to have a complexity level, whether it's just understanding what they are, understanding how they get into the portfolio, or just managing them, I think that's key, right? Because you don't want to leave investors behind. And so I think the advisor having access to these things is critically important. I think it makes a ton of sense. The other is just their ability to communicate. So linking the financial plan to the investment products, in this case the structured note, I think that's a hard thing to do as well. And so I think, again, their value is in that, creating accessibility, understanding of those complex products, recognizing their role, and then just communicating ongoing. Here's what's happening, right? Here's how it aligns with the plan we laid out, or not. So we have to course correct. And so that behavioral coach, right? It does, having access to more technologies, more products, does allow them to coach that client on defining a plan, staying the course, in a way that I think delivers better outcomes. And so highly aligned there as well.
Good. So let's talk about Halo, right? Because you guys have been growing very, very considerably in the last 10 years. I mean, I remember you were only
Yeah.
4 or 6. Now how many are you now?
10.
With 10. So how is Halo going to scale globally, right? Because I know you have a global presence.
Yes, absolutely. Corners of the market that are very much like the U.S., quite frankly. So we find very attractive in terms of the way the advisor interacts with the investor, places that have just not found, quite frankly, yet the product itself. As you probably know, we have a strong connection to the UAE. Their interest in becoming a global market is very aligned with what Halo is after, and so strong partnerships there that we think offer some really strong upside here into the future. You're there in London in the UK. I think the UK market is one that we have a lot of interest in. I'll say further exploration. We've definitely done some exploration there, and so we certainly have global aspirations. Now, as a lifelong or most of my life professionally a product manager, you have to build it, nail it, and scale it, right? And so we want to make sure
Yeah.
we don't lose sight of our U.S. market here, but at the same time finding investors, finding advisors with similar infrastructures where we can port that technology and people into those other markets is definitely something we're after. So UAE, the UK is something that is of interest to me. I look down into Australia, and that's a
Yeah.
market again that has a similar advisor investor base. And so we have our pulse right on the global markets. It's interesting. Europe is one that's a very, it's a mature market, right? There's a lot
Yeah.
more
Very much.
participation. And so we're being very careful there. We announced a partnership with Kepler Chevreau recently, just trying to figure out best points of entry. But we do see a global opportunity for utilization of the product set, and want to make sure, though, it aligns with the technology first mentality, that investor first mentality, just making sure it fits into the solution, the portfolio the right way.
So, I mean, when I see Halo, right, I see these two things, right? It's a technology firm platform, and another one which is more the distribution, gave the service to the advisor. What do you say Halo is between the two?
Yeah, it's more. Yeah, I would say it's technology first. And so the reason I say that is, as you mentioned, right? So you have the US RIA market is highly dispersed, right? And so strategically, when Halo thinks about engaging with that advisor, we want to make sure that when we take their time, right, to be in their office or be in a phone call with them person to person, it's the highest value point of contact. Value point of contact is when you're in that human to human engagement. The rest, right, you want to use technology to get that advisor as far down the field as possible on their own, with data, information, analytics served up to them, such that, again, when they pick up the phone to call us or we do the same, it's really, again, at that highest point of valued contact. And so we have to be technology first, or else they nor we can get the scale we both want in our businesses where adoption fails, right? And so I would clearly say, technology first, but we do not underestimate the power of the human and the engagement and relationship that they do have with that RAA. We just want to make sure it's as high value as possible.
Yeah, interesting. So Matt, couple of things. I do have quick fire rounds to do with you.
Yeah.
So
All
quick
right.
questions. You just say whatever comes into your mind. Okay, are you
Yes.
ready?
Okay. Yeah, I'm ready.
Okay. First, investing insight that you learned.
Wow. Okay. Yeah. I'd say the best academic and theoretical solution is not always the one that the investor takes, right? So behavioral finance, value behavioral finance is critical.
Best advice for RIAs when it comes to structured products.
Start straightforward and simple. That's a great question, and I'd say start straightforward and simple. Right, look at notes that are aligned with your asset allocation policy. S&P, Russell, Dow, straightforward growth notes with some level of protection, which will give your client a great experience, but align with the portfolio that you're looking for. So start plain vanilla. Don't get too exotic.
Let me stop it.